I could say that 99% of what is available online does not work. Swing low, where initially the significant price movement starts. I think in total I had like $4,000, $5,000 in payouts.
Hello, Francisco. How are you doing?
Hello, I'm very good, Jacob. And about you?
I can't complain. Everything's been all right lately. So before we dive in, can you maybe introduce yourself a little bit to the community?
Okay, so my name is Francisco. I'm originally from Portugal, Lisbon. Currently living in Lithuania. I've been trading I'm interested in financial markets since 2006, but I'm more committed to trading, I would say, since 2016. So it's been a long journey, already 8 years. And right now it's my main source of income, I would say. But I'm also looking for another sources of income. But this is my biggest passion.
Yeah, so you could say you are a full-time trader right now. Is that correct?
At the moment, correct.
Okay, and back in 2016, you said you started 2016, right?
Yeah, 2016 is when I started really to learn properly trading. I was already interested in financial markets since 2006, but I had no idea what I was doing. I was clueless, and my own really experience, it was 2016, I would say.
Okay, and in this 2016, how did you obtain the knowledge, the expertise for trading? I mean, were you learning just what you found on the internet, online, YouTube, or have you actually had some sort of a coach, mentor?
Essentially, it was online. I did a lot of online courses, a lot of scamming. I could say that 99% of what is available online does not work. People should be careful about this. But the most important information is available actually for free. If we are really committed to learn everything that we need, it's available for free online.
Yeah, I would more definitely agree with that. Most of it, even what is taught by those mentors and what it also called for as gurus, is pretty much available online for free. Just give it a time and search it and learn it eventually. Moving on to your trading strategy, how would you define your trading style, your trading strategy?
Okay, I would say that it's more focused in price action. I don't like to use indicators. I can use one or another indicator just as a confluence factor, but it's not the most important in my strategy. And I just try to see what the price is doing, what the price in some way is telling me. For me, I see like it's like a communication between me and the price. And I just have to understand what the price is trying to tell me, essentially where the price is trying to go next. That is my main focus. So I focus in price action and try to anticipate where the price is going next.
So would you say you're purely technical trader? Or?
Yes. I just trade where there is high impact news because I consider that it's gambling, basically. Because we have no idea what will be the result and there is volatility and all that. But I just try to look to the charts, I look to the candles, and I know what I have to do.
Okay. Do you think it would be possible for you to show us live charts and outline what is your analyzing look like?
Okay, I can. So this is the chart from gold. I'm trading just the Nasdaq and euro dollar, but I'm trying to expand. So I also try to see other financial assets that I can actually trade. So when I look to a chart like this, my charts, they are always naked, like 95% of the time. When I look at a chart like this, I try to understand where the price is going next. And the main points of interest, this is a live chart, it's happening right now actually. Usually it's related, for example, here, this is very interesting for me. Why? Because I see here a double top. I'll put here a line right here. And if you look back in this double top right here, there is here what we call a gap. Okay? So I'll put here a rectangle as well. Okay? Yeah. And here we have a significant low right here because we have a swing low here and we have another swing low right here, for example, or another one. So we can call this a more significant low. So this is immediately a point of interest for me. Okay, so I believe that eventually the price is going here, so my bias is a short bias, because I see that the price, I believe, before going down, it some way will trigger some stops to the upside, especially on these areas where there is double tops, where most part of the traders are putting stop losses, and where there is a inefficiency right here. So this immediately becomes a point of interest. And then when I have this setup, I would say I would draw a fib, but this is more like a confluence factor for me. So I like to get in the price in the lowest part around here, okay? Or if I see the setup right on the top, I would like to take a trade right here on this area. So I'm waiting for, as you can see, the price from here until running on these stops on this area. The price were doing higher highs. We have a high here, a higher high here, a higher here, and another one right here. And we are doing also higher lows. This one, this one, this one, and this one. So we can see in some way like we can consider like a channel. Okay. Once there is a break of this channel, I would say, or structure, we can also call structure, I would say that eventually the price is not anymore in a buy program, eventually it's in a sell program. So it's confirming that eventually the price is coming down right here. So once it's break like this swing low, as it broke right here, for example, now each gap that are on this area, we have a gap right here, for example, we see a gap right here. This would be a place for me that potential I would like to get in on this area. I would put a stop loss on this high, and probably I would target this swing low where initially the significant price movement starts. Okay.
Understand that. So basically, if I get this correct, to sum up, you basically looking for resistances or supports from technical perspective, and also the fair value gap, or what is called fair value gap, and then waiting whenever the price is going to take the stop losses of retail traders, or what do you believe are the stop losses of retail traders, which usually match the resistance or the support. And once the price bounces, you wait for the confirmation and then you enter the trade.
Basically, it is that. What I try to think also, it's where there is a support and resistance. It's where most part of the traders, they have their orders as stop losses or even entries, right? And most part of the traders, unfortunately, they lose money, right? So I believe that the market are going on that direction just to trigger those orders from those traders. And then I use that as a confirmation, I would say, to confirm my bias. Because first I need to think where the price is going.
Okay.
And when the price is going on the opposite direction, triggering certain areas like these double tops, when a lot of traders maybe have stop losses orders here, for me, this is a confirmation that it's actually going to the downside. And then the gaps, those gaps, it's where there is eventually inefficiency because the price is already showing acceleration to the downside. So it's leaving these kind of gaps. So I use them to try to get in on my trade.
Oh, okay. So you enter on the gap once there is some bearish momentum in, for example, here. It creates the fair value gap that you're trying to enter when the price returns to the fair value gap, where you look for the entries, right? Okay, perfect. Now I understand it. Okay. And from what I see, you've got also very tight stop loss. Is that some part of your approach to risk and your risk management? You usually having tighter stop losses with larger risk reward ratio?
I'm using a fixed risk reward ratio. And sometimes even I'm using a negative risk reward ratio because I have several different models. As I mentioned in the beginning, I can get in on this trade here, around here, but there is another model that I will be getting around here. It will depend where the setup is formed. And accordingly, where the setup is formed, I will use a different stop loss. But usually it's fixed, and it will depend of the financial asset that I'm trading. Okay, For example, euro dollar, I let it fix it for 20 pips. Why 20 pips? Because I did the back testing, I studied, and I realized that for my model, 20 pips works best. Okay. Nasdaq using like 30 M, something like this. And this is always confirmed by the back testing that I did.
Okay, understand that. Last thing maybe that I'm interested about with your strategy is the Fibonacci retracement, because from what I understand, you using it kind of differently than most of the traders who are using Fibonacci to look for entries when bouncing from the level 38 of 38%, 50 or 61 point. So you are using them to measure the take profit?
It's just like a reference for me to see where the price it is. So this orange line, I would say that is the equilibrium point. Okay. So here on this area, above the equilibrium point, it's in a premium area. So I would say that here the price, it's overpriced compared to where it started the movement that is down here. Okay. So this is a premium area. So it's just telling me it's in a premium area. So I can take trades in a premium area. But also I have another setup that it's forming around here, which is in a discount area. As long as there is a strong momentum down here below the equilibrium that we call it as a discount, I call it as a discount. Also, I can take a trade here. But usually it's a reference point to see where is the price.
Okay, I understand it now perfectly. Yeah. You were trading this strategy while trading the evaluation account and eventually the funded account?
The different variations of this account, of this strategy.
Oh, okay. So you've got multiple variation of this strategy and you testing them as you trading evaluations,
yes,
right?
I already tested a few, and I'm using different models for the evaluation. For the funded accounts, then I will use different models as well. It's very subjective.
Okay. And also the last question, while we have the charts, I see you trading on lower time frame. Is that part of the strategy, or you were just defining the strategy as a practical example, showing it on lower time frame, or is it actually what you're using when trading?
I make a top-down analysis. For example, we are in on the 5-minute chart. But as I look to the price as fractal. So what is happening on the 5-minute chart is also happening on the daily chart and on the weekly chart. But my analysis, it will be starting from the chart. Okay. This one, for example, I'm on the 5 minutes.
Okay.
For example, if I put here the weekly chart, it's loading. Okay. Some time. But on this case, the price is clearly bullish. This is gold. Okay. This is gold.
Yeah.
So it's clearly bullish. So what I'm looking here, for example, and this I was just watching on the 5-minute chart, I'm looking to exactly what I was looking on the 5-minute chart. Okay? It's exactly the same.
Okay.
And then I just go to the 5-minute chart, the lower time frame, just to execute. Okay. But this is not giving me any signal that is actually that I would have like a bearish bias. Okay. But I can do also my trades only from the 5-minute chart as well.
So when you have this sort of a very bullish trend on higher time frames, are you only looking for bullish momentum on lower time frames, or do you also looking for some bearish short-term moves on, I don't know, 5 minutes, 15 minutes, or you just keep it simple while it is bullish on weekly? I'll be bullish. I'll be looking for bullish scenarios on 5 minutes.
To keep it simple, aligned with the higher time frames. Okay. If I don't see, for example, here on this chart, for example, the bias it's really bullish. Okay. So because the price is going up for several months. Okay. This is a weekly chart, and even if you go back, we don't see any reference point to consider it as potential as bearish. Okay. However, if I want really to execute a trade, it will depend also of my back testing data for that financial asset. Okay. If I want really to trade for that data because I have a specific goal in my mind, for example, in terms of cash goal that I have in my mind for that specific month, I just go to the lower time frames that I know that I will find more setups. Okay, but this is not that I'm forcing the trades. I just know that if I go to the lower time frames, I will find setups, and then I can even execute on the 15-second chart if that's the case. Not sure if I answered the question.
Okay. Yeah. Yeah, it most definitely did. Okay, so I think you no longer have to share your charts. I think that traders will can create some sort of a picture of what kind of a strategy you're using while trading with us. So thank you very much. We appreciate that.
Okay.
Right now, what I would be interested is you said that you have been trading a different kind of a strategy or a different variation of this strategy. And how much have you earned with us so far with trading the different variation of this strategy?
Earning, what do you mean?
I mean, how much have you get in payouts from EA market trading this strategy?
EA markets, I think in total I had like $4,000, $5,000 in payouts.
Okay, it's impressive. That's decent. And what account you have been trading with us?
Right now it's $100,000 account.
The standard evaluation, the two-phase or the three-phase evaluation?
Yeah.
Two-phase. Okay. Is it something, or did you choose it for a particular reason? I mean, you usually trade the two-phase evaluation. Does this work for you well, or was it just a spontaneous decision to choose a two-phase evaluation?
I started a long time ago, and we started with the two phases. It was the initial offer as part of the firms, and then I feel like I got used to it. And depending of the format of the evaluations, I don't see that they are much different than each other. But I think for other traders, it might be significant depending of their style. But for me, I just try to read the price as better as possible. That as long as I can read the price, I know that any evaluation, it will work for me. That's what I believe.
Yeah. Okay. You've been trading with us for few months, or is it correct?
My funded account, it's almost 1 year, and I'm actually very proud with this account. This funded account, I think in March or April, not sure, it will be 1 year.
1 year. Okay, the same account.
It's the same account. Yes.
That's impressive. That's really impressive. Sometimes it's not about how big the payout is, but taking or trading the same account for that long is very impressive. How have you been, or what is like trading with us? Can you provide us with some sort of a review if you have enjoyed it, or what is the particular thing that you think EA markets does well?
So far, I think something that you do very well, it's everything, it's like smooth, it's automatic, almost no human intervention. And that gives peace of mind. And knowing that in the end of the payout period, that I will receive my payout, that's also peace of mind, because we as traders, we have bills to pay. We are expecting a certain amount in a specific date. And then if happens something that we are not receiving that amount, it can be stressful and can generate some anxiety, and also can impact our trading performance. So just the fact that I know that the payout will be there, I just need to focus to do my back testing, do my work, be consistent and be disciplined, that with EA, it will be there, the payout. That's for me is the most important, and it's what you are doing best, because in the end of the day, what matters is that you are paying. That's and the conditions so far are being for me top in the industry.
Yeah, we appreciate that review. Thank you very much. Maybe at the very end, some tips for the beginners. So what do you think is the key for the long-term success in trading? And on the other hand, what are the biggest mistakes that do you think traders do these days and they should be avoiding?
Yeah. I think today in this period of times, there is a lot of distractions. The most important is to really focus and to have a big commitment to learn this skill. This is the most important, and not trying to jump from one mentor to another mentor, from one guru to another guru. Trying to find something that is really simple, keep it really simple, and then check the data, do the back testing. This is a work that is necessary to be done. You need data. It's essential for you to be successful in the markets. And accordingly to that data, make some changes, implement those changes. And once you are ready, just go for an evaluation account and try to get funded. But don't rush the process. It's You just have to commit yourself with learning this skill, and that's it.
Yeah, most definitely agree. Take it easy, step by step. Don't push it. Yeah. And maybe the last tip is, what advice would you give to a trader attempting to take on evaluation? Doesn't matter if that's EAD evaluation or different prop firm. Just what do you think would help you when taking the evaluation and starting trading? Having to have in mind that I have to pass the evaluation in order to get the funded account, in order to get payout.
I think it's a great benefit for traders, because for us it's already a little bit difficult for us to be disciplined with ourselves, because we don't have anyone to make us pressure to learn this skill. And when you are trading a evaluation, you have rules. You need to follow those rules, even if you didn't create those rules, but those rules are similar to really what would be to trade a big account. As you were like a hedge fund manager, the institutions, they will put rules. One day, if you want to manage money, your clients, they will put some rules, because they are just tolerate some limit of drawdown, for example.
Yeah.
And prop firms, they allow this in the evaluations, and you need to get used to it, because for you to just be disciplined by yourself, it's very difficult, And if you have a prop firm, there will be someone telling you, "Hey, you broke this rule. You are not consistent. You are not disciplined on this rule. You have to follow these rules," because the key for the success on this industry is to be consistent during a long term of time.
Yeah, most definitely agree. Yeah, thank you so much for making this interview happen. Thank you for your time and effort, for sharing your strategy, trading style. And I wish you the best in the future with us. And I hope we'll see each other once more on another interview in the future.
Yeah, I hope so. Thank you very much, Jacob, for your time.
Okay. Enjoy the rest of your day. Take care.